In September 2025, Salesforce CEO fired 4,000 people and publicly declared that AI had made them unnecessary. That was nearly half of their customer support team gone in one single move. And just 3 months later, he admitted that their AI wasn't reliable and started begging for those employees to come back. And the AI bet that was supposed to save the company is generating only 3% of their total revenue. So how does one of the most dominant software companies in the world mess it all up? To understand that, you need to go back to 1999. Mark Benioff was a senior executive at Oracle, and in his 13 years climbing the ranks, he noticed something that nobody was fixing. You see, businesses needed software to manage their customers, track sales, and close deals. But the tools that existed at that time cost millions of dollars to just get started and took years to implement. And only the largest companies in the world could afford it. And he thought that there had to be a better way. And Benioff's idea was quite simple. What if you could do all of that for $50 per user per month through a browser? No installation, no IT department, just log in and start selling. To announce this vision, he hired 25 actors, dressed them in crimson t-shirts reading "No Software," and staged a fake protest outside Siebel's conference. And you see, Siebel was the biggest CRM company back then. He even created a fake TV crew called Channel 22 to film it and make it look like real news coverage. Siebel executives called the police, but the stunt made headlines. And Salesforce had its first moment of cultural relevance before it even had a single customer, and the product definitely matched the promise. You see, small businesses that could never afford Siebel suddenly had access to enterprise-grade CRM at a fraction of the cost. And Salesforce revenue went from $22 million in 2002 to over $300 million by 2006 to $2.2 billion by 2012. And in 2005, Oracle bought Siebel for $5.8 billion, and Benioff declared victory on stage. By 2023, Salesforce had $31 billion in revenue and 90% of the Fortune 500 companies as customers. But what made Salesforce truly untouchable wasn't just the product, it was the ecosystem. AppExchange launched in 2006, predating Apple's App Store by several years. And thousands of third-party apps were built on top of Salesforce. I mean, literally, an entire consulting industry emerged from it just to implement it. And switching away from Salesforce meant not just replacing software, but rebuilding an entire business operation from scratch. And that moat is what made them so dominant for so long. But somewhere along the way, winning wasn't enough, and Benioff wanted more. And that ambition is where the problem started. In 2018, Benioff stood on stage at Dreamforce and announced a target that few people believed was achievable. He wanted to grow revenue from $13 billion to $23 billion in just 4 years. That's 20% annual growth for a company already generating billions of dollars. And to hit it organically was almost impossible. So he decided to go shopping. He bought MuleSoft for $6.5 billion, Tableau for $15.7 billion, and Slack for $27.7 billion. That's over 66 acquisitions in less than a decade. And remember, neither Slack nor Tableau were profitable when he acquired them. Slack was losing money competing against Microsoft Teams, which was being given away for free to every Office 365 customer. And Tableau was a data visualization tool that looked good on paper but never fully integrated into the Salesforce ecosystem. And each acquisition added complexity without adding focus. Customers who chosen Salesforce because it was a simple, affordable alternative were now complaining about the same thing they used to complain about Siebel, that it was too expensive, too complicated, and needed too many consultants just to run it. And Wall Street was watching all of this. 5 of the world's most aggressive investment funds piled in at the same time, all betting that Salesforce had lost the plot. And they were right. The stock had been trading close to $300. By December 2022, the stock had crashed 58% to $126, and both co-CEOs left within 18 months of each other. And Benioff ended up cutting 8,000 jobs in January 2023. He refocused on profitability, and by 2024, the stock had climbed back to $340. The company looked like it had stabilized, but the existential threat was still coming. In November 2022, ChatGPT launched and made everyone in enterprise software ask the same question. What happens to our business if AI can do the work our software manages? And that question kept Benioff up at night. And his answer started with a simple but terrifying realization. If AI could do the work of salespeople, Salesforce had no business left. You see, Salesforce charges per seat, per human user of the software. If AI agents replace those users, there are no seats left to sell. And that was the fear that kept Benioff up at night. And it was already starting to happen. Customers were routing their CRM data directly through ChatGPT and bypassing Salesforce entirely. So Salesforce engineers built a ChatGPT integration in just 4 weeks. Not because it was a great product idea, because if they didn't, Salesforce would be cut out of their own customers' workflows completely. And then on January 30th, 2026, Anthropic released Claude Cowork with 11 plugins targeting sales, marketing, and CRM workflows directly. The exact territory Salesforce had owned for 25 years. And the market reacted immediately. Over $285 billion was wiped from software stocks in a single session. Thomson Reuters lost 18% in a single day, and Salesforce dropped 7%. And traders started calling it the SaaSpocalypse. And AI wasn't coming for enterprise software someday, it was already here. And Benioff's response was to go all in. In March 2023, Salesforce launched Einstein GPT, a promising AI that could write emails and summarize customer data automatically, but it underdelivered. Then they rebranded it to Einstein Copilot, and that ended up underdelivering as well. And then came Agentforce. It was no longer an assistant, but autonomous AI agents that could handle entire customer interactions without a single human involved. And each rebrand was supposed to signal that Salesforce had finally figured out AI. But each one ended up just raising more questions than it answered. And Agentforce came with a new pricing model, not per seat per month per user, but per conversation. It charged $2 every time an AI agent handled a customer interaction. And Salesforce was betting their entire revenue model on AI agents working reliably enough that customers would pay per use. And in September 2025, Benioff decided to prove to the world that it had already paid off. Mark Benioff told the world that he had cut the customer support team from 9,000 to 5,000 people. To quote his exact words, "I've reduced it because I need less heads." And then he started boasting about it. He told investors, customers, and the press that AI had made those 4,000 people unnecessary. But he went further. He started telling other companies that if Agentforce was working so well at Salesforce that he could eliminate nearly half of his customer support team, they should be buying it too. I mean, come on, he was using his own employees' job losses as a marketing tool. But then the real-world results started coming in. Agentforce struggled when given more than 8 instructions simultaneously and started omitting tasks. It couldn't handle complex multi-step customer requests. A simple workflow that a human would manage in a few minutes were taking multiple attempts or failing entirely. Vivint, a home security company, reported AI agents randomly started failing to send customer satisfaction surveys. The system had to be rebuilt using simpler rules rather than the generative AI that had been promised. And just 3 months later, a senior Salesforce executive admitted this publicly. To quote, "We were more confident about what the AI could do than we were prepared for what it couldn't." The product Benioff had staked his reputation on wasn't ready. And then Salesforce started begging for those people to come back, redeploying workers, hiring 20% more account executives to handle the demand that AI was supposed to cover. But admitting that AI failed was only half the story. Because while all of this was happening, nobody had checked whether Agentforce actually worked for their own customers. In May 2026, Bloomberg sent reporters to check whether Agentforce actually worked for Salesforce's own customers. And what they found told a very different story. You see, Salesforce had been publishing marketing videos showing Agentforce transforming how their customers operated. For example, it showed UChicago Medicine using AI to handle patient scheduling. And Williams-Sonoma, the American home furnishings retailer brand behind brands like Pottery Barn and West Elm, and using AI to give personalized product recommendations. And Finnair using AI to manage customer service entirely. But when Bloomberg's reporters actually called these companies and asked to see the AI in action, the story changed completely. You see, patients calling Chicago Medicine were still being met with keypad menus and human schedulers, no AI involved. And Williams-Sonoma's AI features weren't integrated into their live customer service at all. And Finnair had labeled the features for future planning only, meaning that they didn't exist. Not one of the 3 customers Salesforce had showcased in their marketing was actually using what the video showed. And when Bloomberg confronted Salesforce with their findings, Benioff's response was that the commercials were future-oriented, and that they advertised features that they're working on and not features that actually exist. And it wasn't just external journalists raising concerns. Salesforce's own engineers described the internal AI coding tools as frustrating and practically useless. The tools couldn't understand the existing code base, and they were supposed to be helping them improve it. And a survey of over 1,200 Salesforce users and consultants found that 50% believed Agentforce was still stuck in the hype stage, and only 11% were running autonomous agents that were in active production environments. And a vaporware research report found that 77% of Agentforce enterprise deployments failed to achieve successful deployment. And on July 9, 2026, both KeyBank and Bernstein, two of Wall Street's most respected research firms, publicly told investors to sell Salesforce stock on the same day, and both arriving at the same conclusion, that Agentforce customer reception was way weaker than Salesforce had been claiming. And while all of this was happening, Salesforce was spending billions of dollars convincing the market that the opposite was true. I mean, yes, Salesforce does generate $41.5 billion in revenue last year, so you'd think that the AI bet that was supposed to save the company would be a significant part of that. But Agentforce's standalone revenue as of Q1 2026 was just $1.2 billion. For context, that's 3% of their total revenue. But Salesforce doesn't report it that way. They bundle Agentforce with Data Cloud, their customer data platform, and Informatica, an $8 billion data management company they acquired, and report a combined figure of $3.4 billion. And the AI revolution Benioff has been promising the world is currently just 3% of their business. And the acquisitions that were supposed to fuel growth are stalling as well. Tableau and MuleSoft, two of Salesforce's biggest acquisitions, grew just 1% in Q1 2026. I mean, Slack cost $27.7 billion and it never beat Microsoft Teams, and 5 years later, it's on its fourth CEO, and the market has definitely been keeping score. The stock peaked at $368, and it's now trading at around $160. The company has lost over $212 billion in market value, and Salesforce generates $14.4 billion in free cash flow annually. Instead of using the money to fix the product, they're spending $25 billion buying back their own stock to prop up the share price, all while the underlying business stalls. I mean, that's what a company does when it's out of answers. And while Benioff has been managing the stock price, the person who might have actually known how to fix the product ended up leaving and built the company Salesforce should have become. Brett Taylor spent 14 months as Salesforce CEO and left in November 2022. No official reason was given, but what he did next suggested he'd already figured out what Salesforce couldn't. In 2023, he founded Sierra with a completely different approach. Where Salesforce charged per seat regardless of results, Sierra charged per outcome. If the AI solved the customer's problem, they paid. If it didn't, they didn't end up paying. So no bundled revenue figures, no vaporware demos, and no future-oriented commercials. And the results spoke for themselves. They ended up generating $100 million in annual recurring revenue in just 21 months. And within 2 years, over 40% of Fortune 500 companies were paying customers, including Prudential, Cigna, and Nordstrom. By May 2026, Sierra raised $950 million at a $15.8 billion valuation. And while Sierra was charging for results, Salesforce was still trying to prove Agentforce worked. But here's what Salesforce won't say out loud. Agentforce is designed to replace salespeople, the very people who use Salesforce every single day. And every Agentforce seat sold is potentially a human Salesforce seat that disappears. And the company built to help businesses manage their customer relationships is now building the technology that removes the need for those relationship managers. I mean, in a way, they're kind of eating their own market, and Benioff has never publicly acknowledged this. And here's the full circle moment. Salesforce started in 1999 by disrupting Siebel by being simpler, cheaper, and more accessible. Over the course of 25 years, they became exactly what they disrupted. Now they're at the risk of being disrupted by their own former co-CEO. Let me know in the comments below, does Salesforce survive the AI era, or does it get disrupted the same way it disrupted Siebel? If you like this video, subscribe and I'll see you on the next one.